basic resources. Because financing is the critical resource to move a resource from where it is to where it has to be to co-produce with the technology or to move resources together to be able to expand. So this is not easy. Lots of entrepreneurs has experienced the battleground, but we are going to talk about, how investors and how entrepreneurs think about these problems of alignment and the mobilization of financial resources. So we have so happy that we have 3 panelists today. They're standing here right beside us, and I will introduce them shortly. But before we start, my name is Per Ingvar Olsen. I'm professor here at the Business School, Department of Strategy and Entrepreneurship. Mostly teach entrepreneurs, business people who are trying to do the same thing that we will discuss today. So hopefully I can learn something as well to bring on to my students. So this is my role. And then we have the panelists. First of all, we have our entrepreneur of today. This is Alexandra from a company called Identify, used to be Unify, changed the name. So she is a data scientist, so coming from the tech side. And then we have 2 venture investors. One is Kristian, Røsjø, which is from Antler, which is an international operation, and you represent the Norwegian sort of arm. And then we have Kåre Stene, who is a co-founder of Oda, which means you are also a tech entrepreneur, business entrepreneur, and a representative of Skyfall Ventures. So we will have this discussion later. So first we will start by having some short presentations of each of these 3 companies. And first I'd like to invite you, Alexandra, to come to the stage and then bring the audience into your world.
Okay.
And try to explain to us your experiences with financing of your company.
Absolutely.
Yeah.
Is there a clicker?
You have a clicker? Does anyone have a clicker?
Uh-oh. Okay.
Do like this. Here it comes.
Always good at clicker.
There you go. Okay.
Yes. Hello, everybody. I'm Alexandra Gunderson, CEO and co-founder of Identify. Sorry. And I'm really excited to be here to present Identify, but also to share a little bit about the journey that we've been on and the role that capital investment has played in that journey. But maybe before I go into how we've used our investment, I can share why we started the company. So my background is as a data scientist, but also as an engineer, working in developing AI solutions for large industrial operations where they have a huge problem. And that problem is the global cost of inefficiency. It's north of $500 billion every single year in just the metals, petrochemicals, and chemicals industries. And that's largely due to 3 main factors. So the first is the high cost of downtime. So for an offshore oil and gas operator, downtime might represent something like €1 million for one day. The other is the high cost of equipment efficiency. If that goes down, then it's a lot of money for these operators. And then the third cost is the high cost of energy, but also the high amounts of energy that these operators are using. So, all of these companies are really interested in reducing this. They want to reduce their downtime, increase their uptime, and of course, reduce their emissions and electricity footprint. And one way to do this is, of course, with digitalization. So using the data that they have, applying analytics, and reducing all of these numbers. And a lot of these organizations are already doing this. But what they're finding is they're landing in what I call pilot purgatory. So something like 19 out of every 20 AI initiatives that are started fail to deliver any impact and any value. And the reason for this, there are a lot of good reasons for this. One of them is the aging assets. So we're talking about industrial assets like in the hydropower industry. The average age is 40 years. So we're talking about applying new age technology like AI to old age assets. So technology that comes from this century to assets that come from another century entirely. So this makes it really difficult. The second problem is now I blanked, I'm sorry. But we're talking about applying analytics to low statistical significant events. So if you look to apply predictive maintenance, you're talking about one example to learn from every single year, which means that you don't really have the amount of data, and definitely not the amount of labeled data that you need in order to apply analytics successfully. So these are some of the reasons that we started the company, and our mission is really to transform data into insight by providing the software that allows these organizations to have more flexibility and apply it at scale, so that they can get to the insight faster and collect more high-quality data insight. So we've been around for about 2 years now. We started the company in March 2020, have built up the team, have been working with large operators like Yara, the Department of Energy in the US, and then recently started working with some German manufacturers, Wieland and Wacker. So our first sort of end-to-end solution is around optimizing the energy efficiency problem. So we build all of the technology and the infrastructure underneath, but we realized that in the market, and this is maybe one of the lessons learned over the last 2 years, is people don't really need platforms, they need solutions, and those solutions have to deliver value. So the first sort of beachhead market that we saw was in the metal manufacturer industry, where they spend, so for one of our customers, they spend 180 million euro every single year on electricity alone. So if you can reduce that by just 5%, you can save them a huge amount of money. So this is the solution that we focused on now, and we find that it can reduce for our customers by just reducing the 5%, €1 million per plant per year. So it has a huge business potential. And so this is really where we're focusing all of our efforts on now. But we started the company in March of 2020, so I think exactly 1 week before the pandemic hit. So I don't know if our story is always as reflective of other startups, because of course it was a very unusual time to start a company, and it's the only example that we have to refer to because we were all first-time founders. But prior to starting the company, before we quit our jobs, me and 2 others, we talked about this problem. We sat in a room and we met every single week, multiple times a week for 6 months. And so in that time, we met with potential customers, potential users, to get sort of the confidence that we needed to quit our jobs. And then eventually we did, and we raised our first round of funding at the time that we started full-time, which was in March. And then at that time, there was a lot more opportunities for soft funding from Innovation Norway, for example, and we were also able to get matching investment from them. In the first year, there was a lot that happens. There's always a lot of firsts, of course, your first year. We established a subsidiary in the US because we started working with the US Department of Energy. So we had to have a government contract. We had to be established in the States. So we signed our first customer contract later that year, hired our first employee, and then last year we had started working with these pilots on the Department of Energy, with Yara and a maritime company, and we had gathered the trust that we needed for ourselves to take this further. So we raised a larger amount of funding that was about 7.5 million kroner, and then raised also money from Innovation Norway towards the end of last year. And then I guess maybe the reason I'm here is because we were also part of BI's business strategy program together with MIT. So a little bit, I guess, about the role that capital investment has played for us. So we raised these 2 rounds. I guess there's a lot of ways that you can call them, but we call ours, the first round was a pre-seed round. So it was private capital, about 1.5 million kroner, and the grants from 1.5 million kroner. And then the second was substantially more, so 10.5 million kroner in total, the early seed round. So the focus, of course, also changes with time. So our focus in March of 2020 was okay, we think that this is a great idea. People are saying that they would buy it if it existed. Now we need money to go and build it. And we wanted to test the need in the market. So that was our focus then, and getting pilots with large customers to validate the need for this type of data in these industries. And then last year, or I mean this year now, since we are using this round, is really to grow the team and to grow our revenue. So our focus is trying to grow our revenue away from delivering services, delivering pilots, and more in terms of closing product revenue. So our first investors, and then I think Kristian and Kåre will tell more about the different types of investors there are. But we had heard good things about Startup Lab. They had this accelerator program that they run 2 times a year. So that was what we applied to, and we got in, and it ended up being a great solution for us. And then the last round that we have 2 VCs. So we have Forward VC, which is a Dutch-based VC, and Investinor, and then we have some angels. So we have angels like Magnulf Pilskog, who started Ardoc, and then we have other experienced founders in the angel fund. So our focus and our maturity, of course, has shifted with time, but throughout we've considered these 8 T's. So I had heard about them from this, it's a VC based in Denmark called Byfounders, and I think it used to be 7 T's, but they've just recently changed it to 8 T's to include the tomorrow part, because of course that's not very, very important now. And I've just sort of noted the ones that I found maybe have been most challenging, but also most important for us. And that's team. So, of course, every investor says that and particularly in the beginning, right, they're investing in you. So you need to have a team around you that has to be able to answer why you are the right person to solve this problem. The second one that has been really important for us is around traction. So trying to be able to say, do your customers love you? And even in the early days, right, you need to find users and believers. One lesson that we have is that maybe the 6 months before we started the company, we met with former colleagues, former people that we went to school with, and we're asking them, if this product existed, would you use it? And there's sort of this reinforcing bias that, people that like you, of course, aren't going to say no. So sometimes I think that you can be falsely informed by the people that you're asking. And it's really important that you don't measure traction maybe necessarily in terms of the number of people that like you, but in terms of the number of people that are willing to pay for your services. And so that's been really the primary focus for us, is to grow our revenues, and primarily grow our revenues linked to the product itself and not as a services company. And then also, of course, you have to be transformational, particularly if you're raising money from VCs, right? They don't invest in incremental innovation. You have to have something that's going to not only change where you live, but can change the world, have a global impact. And then, of course, the transparency part. So when I think about the role of investors, everybody says you don't just need money, you need smart money. And I think that's something that you learn, especially as you go on, as you meet with more investors, right? Everybody has their own ethos, the things that they invest in and why they invest in it, and their experience. And that, of course, colors what they're able to help you with. And that's something that I didn't really think about in the beginning when it came to what was it that we really needed help with. We didn't really realize how much help we needed with sales and with marketing. We are a very technical team, and I think we had this belief, right, that if we build it, they'll buy it and they'll come. And we thought, we'll put sales a little bit to the side, but we had investors that were strongly opinionated, and they were very right. And that is that you should be splitting your time between building and selling so that you're making sure that you're building something that the market needs and wants. So there's, as a data scientist, as an engineer, formulas. And this is by no means the official formula for success. But I think that you can split it into, you need time. It takes time. There's no such thing really as an overnight success. You need money. You need effort. You need to have people that are going to be willing to put in the work. You need to have smart people. They need to have skills. You need to have a good idea. And then here I think you can maybe swap out. It has to be innovative, and you have to have passion. And so if you have one of those three, you're probably okay. If you have all three of them, you're probably in an excellent position. And then you need to have product market fit. And so if you have all of those, you can achieve success. So what role does investment play in that? I think the obvious answer is that time, money, effort, and skills are very clearly dependent on capital. You need money in order to create runway, in order to deliver, in order to hire people, to deliver this effort and the skills. But I think actually all of these depend on strong advisors and strong investors. So if you have really great capital that can help you make your idea better, make your tech more innovative, or maybe keep you motivated so your passion stays up, and they can help you achieve product market fit by introducing you to customers. And so I think with all of these and with capital, you can achieve greater success. And so for us, the takeaway has been really, of course, capital, money. You need money in order to run a business. You need to pay people salaries. You need to travel. You need to have an office. You need to have equipment. So there's no doubt, right, that you need money. But the smart money, I think, goes into the advice, so the guidance and the mentorship that you can get. So we've brought in great advisors, and some of our investors have been more actively involved than others. It's really nice to talk to people that have been there before, that understand that it's not just a numbers game, that this is about people, and it's about tech, and it's about customers, and they can help you to get to the success. And then network. Hiring people, especially hiring people in Norway, and hiring technical people is extremely difficult. Finding great advisors is also really difficult, and getting customers. So we work in enterprise sales, and enterprise is a totally different beast than B2B, and then from B2C. So you don't need hundreds of customers to prove success. You can live off of one contract alone. But, of course, it takes a really long time to do that. And in order to get into those conversations, you need to have people that are sort of propelling you forward, because it's not so often that as a little startup of 6, you're going to get a meeting with the CEO or the person that's going to close those deals. So you need advisors and investors that can promote you. And then, of course, since we're this technical team, we know about building technology, and we know about debugging it and making it as robust as possible. But there's so much outside of that that you need to run a business, particularly the commercialization aspect. And so our investor from the Netherlands, Vince at Forward VC, has a background in marketing, has a background in selling, and he's been instrumental in helping us position ourselves, talk about what we do, and always being there whenever we need to talk. I mean, there's, of course, everything around advice and guidance when it comes to just selling and customers. But it is also a very trying journey to be a founder. And there are some days that go better than other days. And sometimes you have difficulties with your co-founders, maybe with your employees. And it's always good to talk to somebody that can help you keep a level head and really give you the advice that you need. So I think that's all I have now. I guess my takeaway before Jon Kåre and Kristian would go is that good investors can help you with everything. And I can't wait to hear what you guys help with.
Thanks a lot. Okay, thank you. No, you said. Yeah, so this is a startup. And so what we will consider is that now this is a company that lays the foundation of a company. You know, you have to nail your business plan. You have to figure out how to do it. You have to build the base. And that's a small team. So, and you use relatively small money. You raise a lot of money, but in the bigger, if you're going to make a world impact, we talk about a lot of money and several rounds of investments. So what we will turn to now is I'll invite one of the investors. We'll still sort of focus on sort of early phase investments and how to build the process. And then we sort of expand up the ladder in the next round. Okay, so Kristian, the stage is yours. And yeah.
Thank you. Hey, good afternoon, everyone. Thanks for inviting me, and thanks for spending the afternoon with us and not outside in the sunny weather. It's good to be back at BI. It's also a bit sad. I almost burst into tears when I stepped out of my car and looked at this building because I realized I graduated from this school 15 years ago. But when I look at you, I feel like I don't look that much older, but maybe I do. Anyways, so Kristian's my name, partner at Antler, which is a global venture capital company. It's Norwegian founded, but it was started out in Singapore. I thought I'd talk a little bit about Antler and sort of how we are a little bit different from a typical venture capital company, because we are very, very early stage. And we're basically about building or helping founders build great teams that we potentially could invest in. Yay. So yeah, in about 4 or 5 years, we've scaled from Singapore to 21 cities across the world. I think by year end we'll be in about 24 cities. We're operating under, it doesn't say here, it fell out, but we're operating under 13 local or regional funds. So 12 of those are sort of local, regional venture generation funds, from which we invest very early stage, sort of the first ticket into young startups that we help build. And then on top of that, we have a larger global fund called the Antler Elevate Fund, which can invest in primarily Antler companies from sort of Series A and onwards. So Antler now has sort of the opportunity to financially support great founders from the early days all the way up until an exit. So far, we've invested in 450-ish companies. And this number is sort of exponentially growing now as we are establishing in more locations. And we have about 200 employees. We hire quite many people from BI. I think every half year we get in 2-3 super interns to work for us. So please reach out if you're interested. We love the quality that you bring. So that's, now I said it. Yes, this is our sort of bragging map. We love to showcase this. Look, we're international. We think it's important. We think it's important also to sort of tell the founders that, look, sort of we walk the talk. We've been able to scale. We think that we as investors can learn a lot from each other. You know, if our office in New York or Austin or Sydney is doing something smart, we can hopefully implement that in Oslo the next day. And of course, we think this is good for our portfolio companies. We can put them in touch with sort of a network of 600 advisors, former founders, current founders, experts, business people, investors in many international locations. And we can help our companies scale abroad. So far, three of the companies we've invested in from Oslo have moved and incorporated in the US. And because we have colleagues in the US, we can help them establish and provide them with great support. Cool. But what we sort of, our core model is building deal flow. We facilitate for sort of programs for execution. We spend a lot of time on sourcing, identifying great people, and we optimize for sort of great founder teams. We don't force people into working with each other, but we facilitate for sort of founders to test work with each other. And we try to look or help them build teams that are stable. They've had sort of the tough conversations. They know what roles they have in the team, and they've sort of they've had the discussions on sort of how they should use their time, how the equity is split, sort of their ambition and vision for the company they're building. We love complementary teams, people from different and various backgrounds that complement each other. We think that's super important. We like good sort of founder product fits in the team. We love diversity when it comes to gender, but also when it comes to sort of ethnicity, background, competencies. I'll get back to that in a bit. And we love investing in founders with a lot of ambition and sort of having the right growth mindset. On average, throughout sort of the 2.5 years that we've facilitated for programs and invested in founders and companies out of Oslo, we've seen that our founders have had, on average, 10 years of working experience. We've invested in founders from the age of 25 to 50. We don't think there's sort of any correlation between the age or work experience and success. But again, on average, we have worked with quite experienced founders. A lot of them are well educated. Almost 60% have previous startup experience. Some have founded companies. Some have founded several companies. Some have worked at startups before. It's not a prerequisite, but we think having that experience in a founder team is definitely a plus. And we onboard people. We don't like categorizing people, but sort of a third of the people we bring in sort of have tech competence. Programmers, developers, data scientists. A third have some commercial experience. They can sell. They are sort of operators. And sort of the rest are domain experts. They know something really well from a certain industry. And we think that's interesting. And that's a good way to build complementary teams. So this is sort of the model for how the companies are built and how we eventually are investing. This is sort of based on Oslo 1 year. We spend a lot of time screening founders. In the very early days, we sort of leaned back and hoped for applications. We still get a lot of applications, but now sort of 60% of the founders that we end up investing in are people that we have headhunted, or we've sourced them. We've gone after them. We think they have great profiles, and we ask them, don't you want to build a company? And very often, they want to. And that's sort of the reason for Antlers being, right? We think there's a lot of great people out there that are probably not sort of utilizing their own competence and experience in their current jobs. They're at corporates doing something sort of half interesting, and they could make a lot more impact if they were part of building a company. So we do spend a lot of time on founder sourcing. We select about 100 founders in Oslo each year to join these programs. 10-12 weeks we spend with these founders. Again, we facilitate for them to sort of test out founder teams. A lot of the founders bring in ideas or problems that they are excited about, but again, it's not the prerequisite. We think that we invested in many great founders that didn't have an idea before they started with us. And from sort of an investment point of view, it's quite good because it's a very thorough due diligence process. We get to spend 10-12 weeks with these people before we invest. We think that's even better than having sort of 4 or 5 meetings and doing. I'm not saying other VCs are not doing proper due diligence, but we find this a great way because we get to observe them. We get to see how they fight. We get to see how they socialize. We get to see how much progress these founders make week by week. And ultimately, it is sort of the founder teams that impresses us on traction, on progress week by week that we end up investing in. We think that is a good indication of what will happen post us investing. So, and then we end up investing in about 14 companies on an annual basis. We provide the first ticket, this sort of pre-seed in a way, sort of institutionalizing the friends and family round. We chip in Norway, we chip in at about $125,000. We take about 10% of the company. We're a minority shareholder. We're founder-friendly. We don't have any veto rights. We don't have any, we can't really influence sort of the operations of the company. We don't sit on the boards of these companies. We only want to protect upside. So in case, when these companies go out after us, raising capital from great VCs, we typically follow on and sort of protect our pro rata share. That's sort of the rule of thumb. So when Skyfall invested in one of our companies, we think Skyfall is a really, really good VC. We love them, and then we continue investing in that particular company. Cool. And then we have the global fund, which can potentially continue investing in Antler companies. Not as a lead, but as a co-investor with other great VCs. Cool. Just a few words about, I mentioned it in the very start here, but stability in co-founder teams, I think that's super important. It's sort of a risk for us when we gather all these sort of fresh founders in the room. We work with them for 10, 12 weeks. We need to ensure that they have discussed all sort of the tough things before we end up investing in them. I mean, we spend hours with them going through sort of a list of 60 questions. They have to discuss roles and titles and time and sort of how much equity, how much resources they want to put into this company. So we can hopefully reduce sort of the risk of any co-founder splits later on. 2 minutes? Okay, I'll try to use 5. Okay, I'll go quicker. Complementarity, I mentioned it. I mean, more than 90% of the teams that we've invested in have at least one tech co-founder. 86% have a domain expert. We've invested in 40% of the portfolio companies in the Nordic fund have at least one female co-founder. That's pretty high. I think in the programs, in the Norwegian programs, we've had less than 20% females joining the program, but on average, they do a little bit better. We end up investing in more female co-founders. We love mixed teams. More than 35% of the teams are now mixed. Typically, women tend to sort of group together, men tend to group together. So we spend a lot of time on sort of trying to mix them around a bit. One thing that we're super proud of in Norway is that more than 80% of our companies have at least one non-Norwegian co-founder. I mean, one is a small market. We need to recruit or source great founder talent from abroad. People move in to build companies in Norway, and we have sort of non-Norwegians in Norway that want to build companies. And we think it's good. You build international teams from day one, which can sort of leverage on their international network. And we also think that often, I mean, there's a lot of great Norwegian founders, but very often sort of non-Norwegian co-founders are slightly hungrier. So that we can have sort of a mix of both Norwegian and non-Norwegian talent, we think is great. Yeah, and we love people with growth mindset and ambition. We think that it has never been a better time to build companies than today. Now the world is global. Finally, I mean, it's cheaper to build companies. It's never been cheaper to build companies. And sort of there's so many exciting technologies being developed at this moment. And sort of the whole ecosystem is flourishing not only around the world but here in Norway. So we think that sort of the opportunities have never been better and bigger than today. Cool. I had to speed up there a bit, but look forward to the discussion afterwards. Thank you.
Thank you. Okay. So as you see, this is the foundational work of venture capital industry. It's the basic work which I learned from this, that the industry is expanding this kind of early stage work to put together the teams of entrepreneurs with the attitudes, with the capacities, with the ambitions, with all the personal capabilities that are needed to really make the difficult travel or the route forward. So this is the foundational work that has to be done in some way to sort out the projects and the people that can actually make the big steps later in the scale. So as you see, there was this 13 different places around the world, which is amazing scaling. But there is the very important part, which is the second layer of investment funds that sort of brings things to the next step and the step beyond that and so on. So it's a structured setup. So with these words, I'll invite Kåre to sort of bring us a bit further into venture capital thinking, practices, and ways of doing things.
Thank you.
Okay?
I won't take you guys too far because we're actually the next step typically after Antler. Kristian said we're trying to institutionalize friends and family at this stage, which is also called like the angel stage, or we call it when it started Colonial, it was friends, family, and fool stage, because you really have to be a fool to dare to bet on the team that early. My name is Kåre Stene. I graduated from BI 16 years ago. I tried to come to ease with me being over 40, but I see most of you are pretty young. The two advices: you don't know how free you are right now. If you think you have obligations, that's bullshit, because you do not have any obligations before you have a house, a mortgage, 3 kids, a puppy. So, I mean, it's hard to understand that now, but just trust me, which means that you're in a fantastic position to just go create, build. Even if you mess up once, twice, the learning in those processes is really, really valuable. It's through setting goals, trying to reach your dreams by failing or by success. That's how you learn. And the second thing is to be coming out of school in times like these, with so much opportunities and possibilities laying just in front of you. You guys are really lucky. And just the last advice, you're going to BI, which means you learn business and strategy. You should really learn marketing and sales. I mean, never underestimate the power of sales. And the last thing you should do is to run over to the informatics study at the university in Oslo and get really, 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 really good friends with the smartest people at the tech educational, because you'll need them. So, Skyfall Ventures, we founded Skyfall Ventures in 2016. We have 350 million Norwegian kroner in asset under management, which in the VC world and the fund world and the finances world is a really, really small fund, even though 350 million kroner is a lot of money. We deliberately chose to have small funds because we want to go in, not in the angel typic stage where Antler is having their focus, but in what we call the pre-seed, which is when you get some traction in the product, you have a team and you're ready to really start grow your company. And if you have too much money, you have to wait for the companies, because the companies don't really need that much money in the start. It's much more, as Alexander said, you need strategic, smart advisors and smart investors, which also can bring capital, but also a lot of other stuff. Our ambition is to invest in the top 1% of Nordic startups, tech startups. So it's software-enabled companies that we invest in, and with at least one technical founder. So that's maybe the hardest demand we have before we invest. You need to have a CTO or a highly skilled tech person in your founders team. Because if you want to build a software and tech company, it's hard to understand the complexity and to really know the opportunities and possibilities within technology. And it also, when it comes to things like recruiting and getting a really top stellar team, it's really hard to recruit the best people if you don't have the best people on board. So that's where you should take the bear tomorrow. I'll try to do it a bit briefly, but Skyfall Ventures, we like to see it as a startup in itself. All the founders of Skyfall Ventures has a pretty long entrepreneurial background, so we have built 9 companies from scratch, so we know what it is to be in the founders' shoes. I also co-founded Kolonial.no back in 2013. I worked there the last 9 years full-time, being the COO, growing an organization from 1 to 500 people. Really walked the path and learned a lot. I've done a lot of mistakes, but also hopefully a lot of great stuff. But what we saw was that when we started in 2013, there really was no ecosystem for venture capital in Norway, which it was really hard to get money. And when we were able to get the money, we didn't get the money from necessarily the right investors because they had no experience in building venture companies or building tech companies. So it took us actually 4 years before we got Kinnevik, the first investor in Zalando, on board, that we really got the investors that had the skill set and the mindset to help us. So our dream with Skyfall was to be the dream investor for the early stage company that could think like Sequoia, Andreessen Horowitz, Kinnevik, and all the great investors out there, and make sure that Nordic and especially Norwegian startups could get that competence at the stage where they really needed it. We've been lucky to do a lot of good investments. It's typically 4 sectors that we have that we know that we have our expertise in with it now, but we also invest in other sectors, but it's especially blockchain and crypto and Web3. If you're 25, 26 going at BI and don't have an interest for Web3, then I really advise you to at least start looking into what is happening there, because it's crazy. My thesis is going to transform a lot of the things that you're studying. We also see esports, gaming, and the metaverse, the continuation of the digital world, if it's social media or virtual worlds or whatever. In that space, we see a lot of things happening. There's a company with a Norwegian co-founder called Sky Mavis, which has made a crypto game called Axie Infinity. They have 2-3 million daily players around the world. Their Discord server is twice the size of Fortnite. Then we also invest in green tech enablers, so not like huge CO2 capture facilities or battery factories, but software companies that really enables green tech. And also based on my background from Oda and e-commerce, we also do investments in what we call next generation e-commerce. I'll just skip, this is just some of the companies we've invested in. We like to really, when we invest, we want to make sure that what the company does is funny, it's cool, it's motivating for us because we want to work with them. We spend a lot of time in the start to build strong relations. We don't sit in the board because in the startup at that stage, the important decision isn't taken in the board meeting, it's taken every day 24/7. So to be there on their Slack channel or make sure that they can call us anytime, it's really important. Just our thesis is that we believe that the huge value creation in the 20 to 30 years going ahead will be driven by technology in some way. If you see every industry the last 10, 15 years has been disrupted somehow, some more than others, but a lot of them are ripe to be disrupted. I think Alexandra just mentioned the massive waste of inefficiency we have in the world, which technology will help solve. We live in a region where we have Sweden, which are the Scandinavian superstars in unicorn creation. Finland is also really producing a lot of successful tech companies. And in Norway, we have really lagged behind. But we see now the last years, you have companies like Kahoot, Oda, Cognite, Dune. So it's happening something here. But we do believe that living in Norway, we have the best foundation, both demographically, but also based on such a safe society, that there's no reason why we shouldn't do it the same way as the Swedes. And what we see is important is that there's a change in public opinion. When we started Kolonial, people wanted to work in oil and gas, they want to work in corporate finance, they want to work in McKinsey or BCG. That was the top tier workplaces that people aim for. If you talk to the top students from BI, from NTNU, from NIH, where do they want to work? They either want to create a company for themselves or they want to work in a scale-up. So it's really changed. And now we got some of the companies that has made it, and they can be advisors, and they can pay it forward to the newcomers. And another really important thing is that now we have Antler, we have companies like Skyfall and some others, pre-seed, seed, early stage investors. But if you want to build a global tech company, you need a lot of capital. That scale capital does not exist in Norway. The money is there, but the competence and the focus to really scale companies to become global tech companies doesn't exist. So we need international capital. We need to connect to the international VCs. And what we saw was that when successful Norwegian startups wanted to get contact with the biggest, best venture capitalists in the world, the investors they had didn't have that connection. They didn't have that network. So you had to go to the corporate finance ways to actually get in touch. So what we see as a really important part for us in Skyfall, of course, we want to find the best founders, help them with our experience and knowledge. But we also see it as really important that we in Skyfall are able to create FOMO within at the biggest VCs in the world. And we're also able to create those connections so that we can help the investors. So you don't have to pay a lot of money to corporate finance to be able to get to these people. That was the wrong way. Yeah, just the last slide here. In what we're looking for, this is our top-level investment mandate. So, of course, we're looking for companies that can scale globally and become unicorns. I think unicorn is a vanity definition, but then again, it's a benchmark of a company that has addressed a big total addressable market, and that really has the potential to be big. And there's number one. Around this with the technical component and also the technical co-founder. Just briefly take it. When we started Kolonial, we were 10 people. But first it was me, Carl and Vegard. Carl and Vegard from McKinsey. I had worked 8 years in Schibsted. We had this great idea. We tried to raise 100 million kroners. We went to Rema, Norgesgruppen, everyone said, hey, we want to do this. They just shook their head and said, you guys are crazy, you're never going to succeed. Then we read a book called Lean Startup, which made us understand, okay, you need to build MVPs, iterate. And then we understood, okay, we need people that can build this. And this is so important for the company that we can't outsource it. And then we met the 7 other co-founders, which had a technical background. And without those 7 people, we would never have been able to just start, because when you have the technical builders, you have the digital carpenters, you can start build and you can be able to move. Yeah, so I think we'll probably talk about other things, but that's just a brief introduction to Skyfall and what we aim to be.
Thanks a lot. So we do have a few minutes. I maybe could go a bit over time with our discussion. So please, the 3 of you, to take a seat. Now, we learned quite a lot about the entrepreneurship, the art of entrepreneurship, and what these early stage investment companies are doing. So if we want to just focus on the the financing side, and we now we hear a lot about what people do to succeed. So my question is more, what are the mistakes that entrepreneurs typically do when they try to raise money, and what are the challenges that you face when you try to help people?
I think we've experienced this ourselves from the Kolonial Oda journey, that we had never done it before, so we did a lot of mistakes. The ecosystem wasn't there to learn, to teach us. And I think for you as a founder, I mean, there's other way to fund your company than doing the typical venture way. But if you want to go big and you see that you need to raise capital and you need to go the venture stage, I would really urge you to understand and just learn a bit of how the dynamics is. I mean, Kristian talked about if you come into an investor meeting and you have 5 investors or stock owners that really doesn't contribute at all, or if the key personnel doesn't have stocks, they'll just slam the door at you. That's just such a thing. And we see that a lot in the deal flow, that the cap table, as it's called, is just screwed. So just spend some time understanding, okay, what is the angel phase, pre-seed, seed, Series A, Series B. Just understand it, because I think if you have an understanding of that journey and what is important in the different steps, you'll be much more prepared going ahead. I think that's at least something we felt trying to raise money without really knowing, doing it before.
So the advice is do research. Do understand what the investment industry is, how it works, what the stages are, what they're expecting from the entrepreneurial team, and what the mistakes are.
And all the information is here.
Yeah. Search it. But it's critical to, because they will search you. They will try to understand as much as possible about the entrepreneurial team. And you should try to understand just as much about the investors, because to align means that you need to understand one another. And if you don't understand the model, you're gonna screw it up. And if you understand it and you don't like it, don't enter that door. That's also a typical advice to give. If you don't like to share the value creation process, in the creation process, and come up with some maybe owning a minority share in the end, then this is not a model for you, because it all depends on the mobilization of lots of resources throughout the process. Now, if you look at, you talk about international, what's the difference between the Norwegian, then when it comes to how the venture capital industry works, between the international and what you see here in Norway? You started talking about a little bit of it.
I mean, we have a strong corporate finance, and you have oil and gas and the shipping industry, which is really about analyzing numbers and doing traditional financial analytics. And when it comes to creating companies, it's really about, okay, what's the market you're addressing? Is it big enough? But most of all, the people. So we invest in the people. And I think the difference here, without having a mature venture ecosystem in Norway, you don't have those funds or those bags of capital with that long-term horizon. You're more used to, okay, go to Ernst & Young or EY's Entrepreneur of the Year awards, and one of their criteria for early stage companies, are you profitable? And when we got into SoftBank, and we were proud to say, oh, this was the first year we had black numbers, and he just shook his head and said, you're not supposed to have black numbers now, then your prices are too high or you're growing too slow. And so it's just the mindset that these people are investing in companies that will transform and change the world. That takes time. You need to have long glasses, long horizon, and you need to have that reason to invest your money and be able to have a long-term perspective, and also then then the gains will come both for the founders and the investors. So I think that, it's no one to blame really. I think it's just about we haven't had that ecosystem, but we see it slowly develop now, and you can see in Sweden especially where it's much more mature, where it's more functional also in the later stages for companies.
Now, Alexandra, you had a Dutch investment.
Yeah.
Why did you end up with a Dutch investment? Why not a Norwegian? Did you try to get one, or is it just?
We do also have Norwegian investors, but I think, like you said, the expectations are different, and we've seen it. Also locally here, there's difference in investment ethos, and like you mentioned about the expectations when it comes to an early seed. We were told once that we were too early because we needed to have €1 million in revenue, and they were positioning themselves as a startup capital company. And you'll never have €1 million in revenue if you're at that stage. So our experience has really been that the expectations have been different. We also have investors in the US, and I think that they have this longer perspective and more pragmatic approach to who and why they invest.
Well, if I ask you, your company raised this money. If you were to do it again, what were the mistakes, more precisely, that you wouldn't do again? What did you do that didn't work?
Mistakes. Hindsight is 20/20, and we're going to enter another round in the coming year, and I'm sure we're going to make even more mistakes. But I think one of the biggest mistakes, at least from the very beginning, was not realizing how much we didn't know, and how much we needed to rely on other people that have been there before. So I think that's one. Maybe it's the mindset and having a humble mindset going into it. And we did in the last round, but also being prepared. I think you need to have your deck, you need to have the standard preparations available. And then also that other T on the slide that I showed about know what you want to get out of this. Why are you speaking with this investor? Look at the other companies that they've invested in, look at also their backgrounds, where have they worked before? Find some common ground, right? Because it really is about people, and it's really about building relationships. So I think, also maybe doing more research, finding people on LinkedIn, looking at companies they've started, looking at companies that have invested in them. So more research,
But I think it's important what you say there, because it's a common relation. It's not only someone giving you the money and then they're okay, when do I get my return? I think the best VCs really want to create a strong relation, and that's important for us when like brilliant people come to us and say, oh, we want you to invest in them. We always say, why do you want us? Okay, put away the money, but why do you want us on board? And that's, for us, a really important question, because we want them to work with us as well, not only because they want their money. So I think that
you have to think about it, right? Like a job interview. You know, when you first are getting your first job, it's like, oh my God, high stress, high stakes. You really want the job, but it's also important to realize that you want to work there with those people, and the same applies for. So I think that also helps to take away some of the pressure that you have going into it. That it should be a good match beyond that they're going to say yes and write you a check.
And I think it's a really good point that you as a founder also do your due diligence on the investor. We always encourage our startups as well, do your due diligence. Talk to their portfolio companies. How good were they? How hands-on? What did they help you out with? Maybe talk to the few portfolio companies that are not doing that well. How did the sort of VC act around when things got bad? I think it's super important. It's just a two-way relationship here. Right,
and then you also mentioned that as the investor company, you're in a certain stage. You focus on a certain stage, which means that there is a early stage, sort of where you focus on the companies that are building a portfolio, and there is an exit, or there is a further round. So you work in two directions. You work with other investors. Like you try to, we want to work with the best investors in the world, VCs that can really fund the company and bring it up. So how how do you think, or for your strategy, how are you going to build that position? What is the strategy of trying to attract this, and what kind of companies do you have to come with to be able to build that position?
Yeah,
it's a very competitive industry.
Yeah, definitely, and that's why, in some ways, I'm happy that we are this early, right? That we can build deal flow. I mean, we have to make sure that we build good deal flow. I mean, good companies that are able to, that do well. I mean, that can develop their products and services and are able to, onboard paying customers and attract talent and attract great investors. If they're not able to do well, then great founders will not build their companies with Antler. That is super important. And then, of course, I mean, any VC would sort of talk about how hands-on and how helpful they are, and many are really hands-on and helpful. And I'm not diminishing that. We are, of course, hands-on as we're sort of through the programs helping these founders build the companies. And then we're trying to sort of build up a platform to help these companies onwards. And in particular, we're trying to help our companies, one, raise capital, introduce them to investors locally in the Nordics, but also internationally. So I think I spend probably 30% of my time talking to other investors, trying to sort of warm them up and get them interested in our portfolio companies. We spend a lot of time on recruitment. The fact that we now have 50,000 applications to the Antler platform on an annual basis. That means that we have sort of a vibrant data bank of talents, which we hopefully can onboard to some of the companies. I think some of the sort of the best performing companies, at least in our portfolio, are the ones that are able to attract really great people. It's super hard, right? The sort of the war on talent, and those companies that are able to attract really great people are often the ones that are winning. So we try to help a lot on that as well.
But I think that's been without, for example, the Oda story from my side. I think just the Skyfall journey would be much harder. And because I was a part of the founding team and was incentivized through my founder shares, but then my partners in Skyfall, they were really, really early investors, and they've told me a lot of times, we're not friends, we're not family, so we must be fools. But they were lucky with that investment, and I think for us, having like an institution that had done that investment, made Otovo and Nabobil and other really talented people, we want to be on board with them because they saw something in the Kolonial team. And when we had these logos on the wall, it was easier when we started to raise money. So it's really a snowball effect, and it's a bit vanity game. But what we see that's crucial for us, that we need to pick the winners and the really best winners, because like we invested in a company called Nansen, which last year maybe was the fastest growing SaaS company in the world, a crypto analytics company. And they got Tiger, Axel, Andreessen Horowitz, like the cream of the cream, top tier investors in the world. And of course, when people are, oh, what are Andreessen Horowitz doing? And they look at Skyfall, who's Skyfall? And then they start to see, oh, they did Oda, is a SoftBank fund, and SkyMaze. So I think that's been crucial for us to build. We're a really young team. We haven't done a lot of exits. We haven't really proved the return on investment for our investors, but we've been able to show that we can pick the companies that attract the best. And then what we see is that when we have these investors on the table, it's much easier to go to LinkedIn and say, hey, we're investors in the same company. And it's really that snowball effect. So it's a bit unfair, but then again, for a company, what's the benefit to work with companies or with investors with that network? Of course, both it's a sign of quality, because we know now that international VCs, okay, when Skyfall has done an investment, they in a way prove it as a good investment. And then we also have the connection, and then when it all comes, when everything comes to everything, we're all humans, and it's about human relations, which is also why just building your network and building strong human relations is so important. Because even if it's the biggest corporate or the biggest investment fund, it's still a human being making the decision. And if you do have that relation, it's much easier to get that meeting, to get them to look at things. So.
Okay, so if I try to translate that into a learning for entrepreneurs investigating venture investment companies, what should you be looking for? You should be looking for what kind of partners do invest with this company. What kind of international venture capital, other investment companies do invest in companies that this investment company has brought to the table. Because that is part of the quality assessments. They do evaluate Skyfall and Antler as partners, as investors. So they do a lot of quality work, and when they decide to invest, it's because they believe that you are, solid, and that you are in the process of building a reputation and building an international network. So because the early stage investor, the value of it is what they can help you do right away, but it's equally important, how can they help you plan and build the next step and the next step, and how can they connect you? So the ability to connect is a critical thing that you should be looking at when you do your research on investors.
I think that's also what you said, Alexander, about the angel investors. So angel investor is not a fund or an institution, it's a person. What we see in Norway now is that the amounts of experienced, well-networked angels are really increasing. So that's also something I would really consider. Try to find these smart angel investors because they probably have know-how in what you're doing, but they also have the network.
Okay, are we rounding up the, yeah? So just a last comment on a piece of advice to the young generation. You've already given quite a few on the issue of financing. What should you do or what you shouldn't do, just to round up?
What you I agree with Jon Kåre. What you shouldn't do is sort of, at the minute you start your company, start giving out shares to people who are not contributing. It should be the co-founders, the working shareholders, the ones that are working full-time 100%, who should have the majority of the ownership. So don't give away 5%, 10% to some advisor here that ultimately doesn't really contribute. So I think that's, and we see a lot of that, because we also get a lot of sort of deal flow coming to us. To sort of confuse you even more, Antler also has the opportunity to invest early stage in early stage companies. So we get a lot of deal flow, and we see a lot of cap tables that are a bit messy. So that's, I agree with Jon Kåre, don't do that. What you should do is, spend a lot of time sort of, we're an early stage investor, right? But if you come to us with an idea or a problem, spend a lot of time on sort of researching the problem, digging deep, providing yourself and potentially your future investors with insights. There's nothing more we love than sort of founders learning us something. I'm not saying we're super smart, but it's just super refreshing to meet with founders that have a particular take at a problem or seen an opportunity or know something from a field. And you don't have to be super experienced or sort of old or worked for to sort of gain that knowledge. That's knowledge you probably have already now. Try to sort of convey that when talking to investors like us.
And from you, Alexandra,
Yeah, I think I really liked what you had said in one of your slides about that you encourage all of the founders to have the difficult conversations before they commit to starting a business. I think that's really important, especially if you're going to start with people that you've worked with before, people that you like. If you haven't gone through some difficult scenario together, you won't really know how you operate because you're going to have a lot of difficult times when you build a startup. So I think it's really important to have that conversation, particularly about how you split equity. And to put in place legal agreements from the time that you start. Nobody thinks, or I mean, yeah, you don't really think about legal agreements, right, when things are good, but you need them when things go bad. And so it's really important to have those, have vesting schemes, like you say, don't give away too many shares. And have, option program, have vesting schemes, have all of these clauses in there. Also, I think a sort of lesson for ourselves is also, and Identify, is to have a clause that allows you to buy back shares, because if you do have 3 co-founders, one leaves maybe after 2 years, and they leave with a significant chunk of equity that they don't necessarily have to sell back, that also creates some awkward and difficult scenarios, and it can sink the business. So that's one thing. And then I think the other is really, when you go to investors, is to be yourself. That's maybe a lesson for myself, is confidence that you can only be yourself, and that creates these genuine bonds with other people. So do that, and only bring on investors that you like, because if you don't really like them during the fundraising process, you're probably not going to like them when they have your hand to the fire and asking you the difficult questions. So yeah, I think that's the other one. And work hard.
Yeah, thank you. And Kåre?
I'm getting a bit nostalgic sitting here. And I thought a lot about this, and I said I'm persistent that I will be a smarter, better, and wiser version of myself when I'm 50 than now. And I really didn't think that way when I was 25 to 30, a bit young and promising and full of hybrids. But I just realized how much I've learned those 15 years since I graduated from here. The guy who took my job in Oda, I was so happy that we got him on board. He was 7 years older than me, and he just blew my mind. But I talked a lot about it. I've done this 7 years longer than you. I've done a lot of other stuff. So I think just be a bit patient about experience. But in that note, as I said, you're so free. And don't be afraid to do mistakes. Don't be afraid to have failures, because it's through setting high ambitions and chasing that and learning, seeking advice, just develop as a person. I think that's what you guys should do. If you're lucky, you succeed with your first startup. If you don't give up if you have an entrepreneurial mind, because if you're able to learn all the way, then suddenly you will have what it takes to really succeed. A lot of the richest men and founders and successful men, founders in the world today started their venture when they were 45. But to get there, you need to start on that journey. And some people are able to really success at a young age. Some others have to wait, but I mean, living in these days, you're so lucky. You're living in the best country in the world. I mean, there's not really a risk to take. So just go out there and really start building what you dream to build. And I think another aspect as well, talking about investments, and it's maybe not what I should sit here and say as an investor, but also try to be frugal and to be cost conscious, and don't spend, try really to earn, get cash flow, find a problem that someone is willing to pay for, and do that in a frugal way. And when you really find something that people are willing to pay for, that's when you call me.
Okay, thanks a lot. Reminds us there is no economic value unless there is a sale. So independently of what you think about your great idea, it's worth nothing absolutely nothing in economic terms unless you sell it. And in the end, you have to sell everything. So, because you cannot take it to the graves. That's the circle of business. So to build and to sell and to create value in that way is what we do. So thank you for a great discussion and presentations, and thank you to the audience. And hopefully you got some good advice and some insights from this discussion. And then we'll leave you here and let you enjoy the nice weather and everything. So thank you. And I give a hand to the audience. Thank you. Ja, bra det.
Så bra.
Anyway, not in live streaming, so I can say on behalf of BI and the Division of Outreach, which is in charge for when you guys graduate, the alumni, we want to thank you for allowing us to listen to wonderful presentations and the alumni gifts for you.
Oh,
I
thank
hope
you.
that you all liked it. And for those that are here, we have pizza and sodas and snacks back there.
Thank you.
Go ahead. And then thirdly, if you guys want to have some questions or anything to either the team of innovation or we